The US-China tariff deal is seen as negative for Malaysian glove makers as it makes Chinese gloves cheaper and more competitive, potentially hurting demand for local products. Starting Wednesday, May 14th, the US will cut tariffs on Chinese imports from 145% to 30% for 90 days, while China will lower tariffs on US goods from 125% to 10%, according to a joint statement. According to DH report, analysts are unsure of the exact tariff rate on gloves given the existing 50% US tariff effective January 1st, 2025 and a planned increase to 100% in 2026. However, they agree that cheaper Chinese gloves will hurt local glove makers. Hong Leong Investment Bank expects Chinese natural gloves to face an 80% US tariff, which includes 50% existing plus 30% 90-day rate. It said although these gloves are still costly, cheaper Chinese vinyl gloves may negatively impact Malaysian glove makers. By its calculations, the tariff cut lowers the landed price of Chinese natural gloves in the US from $44.25 to $27 per 1,000 pieces, still more costly than Malaysian and Thai gloves at $17.60 to $18.70. Vinyl gloves benefit more, with prices falling from $22 to $24.50 to $11.70 to $13, making them cheaper than Malaysian natural gloves. It said since Chinese vinyl gloves already dominate 70 to 75% of the US market and are now cheaper, buyers may prefer them, reducing the demand shift to natural gloves, a setback for Malaysian producers. HLIB sees hope for Malaysian glove makers if US buyers switch from vinyls to natural gloves, especially if US-China tariff talks fail. Natural gloves are higher quality, and this shift could help restore supply-demand balance by 2026. Meanwhile, Maybank Investment Bank Maybank IB said US tariffs on Chinese gloves remain unclear, possibly 80%, but could be just 50%. Malaysian gloves face a 10% US tariff until July 8, 2025, then 24% after. The firm warned that tariff uncertainty may lead buyers to delay orders. More importantly, new Chinese glove production in Southeast Asia from 2026 could increase supply, putting pressure on prices and sales. CIMB Securities expecting an 80% tariff on Chinese gloves kept a neutral outlook on the glove sector due to a weak short-term outlook and ongoing uncertainties like the trade policy changes and Chinese expansion. It said stock prices already reflect a gradual earnings recovery expected in late 2025. CIMB Securities said since the US raised tariffs on Chinese gloves in the late 2024, Chinese producers have shifted to non-US markets like Europe, increasing competition and lowering prices there by 10 to 20%. Due to uncertainty, buyers are spreading orders among different suppliers. US buyers are delaying purchases, resulting in weaker demand and lower sales for Malaysian glove makers, likely lasting until mid-2025.